So guys, in today's video, I'm going to be discussing with you about why we see such a low percentage of traders actually becoming profitable over a long period of time. Most traders lose money in the markets. That's sort of a known fact. But what are the real reasons behind this? Is it the methodology they're trading and the strategy system they're executing isn't profitable? Or is it more them in their own minds not actually trading correctly and they actually can't execute it without hesitation? So there are a few truths to trading which are very known, and quite a few authors have written books about these truths, but a lot of retail traders can't comprehend it, and also it sort of goes against a lot of what you've been taught your entire life. So one big thing is that you need to be comfortable losing. You need to learn to lose in the market, and also understand that trading is not about being right or wrong. It is not about being right or wrong. It's very hard for people to get over that, and they think they can basically analyze more and more and more in the market to try resolve their losing, when in reality their losing will actually get resolved when they completely accept the fact that trading is purely probability. You can analyze and predict where the market will go. I'm not saying you can't, because that is how I trade, and so many other people trade as well. They use patterns and things that they've known in the past to occur, and they're using it to predict the future, essentially, to what they think is next going to happen. And you can be right by doing this, but do not think it's about being right or wrong on the individual trade. It's about being right or wrong over a collection of trades. We're talking in the hundreds of trades, okay? So that is where it really comes down to your win rates and your risk to reward to make sure you stay afloat and are actually profitable. In the book Trading in the Zone by Mark Douglas, he mentions the 5 truths of trading. If you haven't read this book or listened to the audiobook, I strongly recommend you go listen to it or read it, because it is a complete game changer. It really changes how you think about the psychology of trading and how you really act towards the market, and really how you basically carry yourself, to be honest with you. So the 5 fundamental truths. So the first one is anything can happen in the market. Absolutely anything. Even if all your technicals are saying this cannot happen in this certain situation, anything can happen. Any big player in the market can suddenly step in and execute a trade which will move the market. Because we all know that the market is moved by volume and big people trading in the market. So big banks and things like that. If suddenly one of these big players entered in the market, it can happen at any time. It doesn't even need to be like London or New York session. It can happen at any time if this person is in the market. And the second truth is you do not need to know what is going to happen next in order to make money. You can predict what the market will do over a long period of time, over a lot of trades, but each individual trade, you cannot predict where it will go in that exact moment. So you do not need to know where the market will go to make money. So that's basically what it means. So you can enter into the market with your probability, but there could be some player entering in that would actually move the market in your direction, but that's not what you were actually looking to enter with. It just happened at that occurrence, and it made you a winner in that exact trade, but you didn't actually know exactly where the market was going, if that makes sense. I don't know if that actually makes sense to you or not. It may get explained a little bit better in the book, so yeah, I strongly recommend you go read that. The third one is, which is a very, very important one, is that there is a random distribution of wins and losses across all of your trades. So if you have, let's say, a 50% win rate, or you're flipping a coin almost, but each time you win, you get double what you lose, then you will have a profitable system. Now, it really comes down to the order of those flipping. So if you have 50-50 chance, who says you cannot lose 10 or 20 times in a row? You definitely can. However, the chances are slim, but they are still probable. That still can occur. So you need to be able to accept the reality that you could go on very big losing streaks and also very big win streaks, and at that same time still keep your psychology in check. When you're on big losing streaks, you need to trust your system and keep executing flawlessly, and also in the same way the other way, that if you're in a big win streak, you need to stay level-headed and not over risk and enter in trades you usually wouldn't take, because you essentially think you're a god in the trading world. And number 4 is an edge is nothing more than an indication of a higher probability thing happening over another. That is all it is. You know from your data you've tested on your strategy or however you're trading that when this system occurs or when this pattern occurs at this certain time, you know you have a higher chance of winning than losing. That is it. It doesn't mean it will win or lose. It simply means I have higher odds of winning, so I should execute the trade. It's not based on how you feel in that current moment of time. And number 5 is every moment in the market is unique. Now, this is also quite a big important one when it comes back to the one where we talked about a random distribution of trades. Because if you have very big lose streaks, you'll think there's a pattern occurring with your losers. So when you see something very similar in the market to these losers you've been happening, you'll avoid it instead of taking it simply because you think there's a pattern when there really isn't. Every moment in the market is unique. And what it means by that is it's unique because there are millions and millions and millions of people trading on the market every single day and every single moment. Even for it to be the exact same, you would have to have every single one of those people trading again in that same moment at the same time, and also the orders would have to be filled in the same order. The volume would have to be exactly the same. Basically, it's impossible. Every moment in the market is unique because of that. So you shouldn't let your emotions get involved in how you think if you should enter the market or not. It should simply be, do I see my system coming up? And is there a high probability that I win? Yes or no? If the answer is yes, you enter. If the answer is no, you may want to stay out. And one thing I've also learnt over these 2 years of trading is that a profitable trading system, I don't think, is the hardest thing to come across. There are so many trading systems out there and most of them work. There are some that the data isn't properly supported around, and that is why it's very important that you actually do have the backtesting data to properly know if it is a proven strategy or not. So if you do have a proven strategy that you're following, it will work as long as you execute it correctly. Now that is the hardest part of trading. Executing your edge without any hesitation or reservation in any moment of time. You need to be emotionless in your trading, execute it how it's meant to be executed, and not view the market simply how you want to, and instead you should be viewing it how it's actually being displayed to you. Now that is why I say in a lot of my videos that I think trading is 80% psychology and 20% methodology, because you can pay someone to teach you a trading system that works. You cannot pay someone to teach you how to properly control your psychology in trading.